What up? Here's my weekly recap for June 23rd to 27. So basically the trades that played out were these pairs on here. Not really, this one hasn't played out yet, so I'm kind of curious to see what'll happen, but these two definitely played out. And these basically, let me just highlight these. These basically just during the week they either hit take profit or just didn't pull back the way I wanted, or just didn't look right. So I kind of just moved them to the section, and these were the ones that we weren't interested in. So I guess we will go over. Let's start with the ones that did play out. So the best one I say would be GJ. So basically, if we were go to the week, oh, whoops, I'm making a store. Uh, let's go to here. Okay. So one thing I was considering is whenever price gets into like daily zones that have a ton of wicks on here, it'll usually like reject. So like if you look here, there's this giant wick, right? The daily got into there, rejected, daily got into there, rejected, daily got into there, rejected. So I was like, okay, there's something we need to watch out for that. Whenever price gets into like these wick zones where there's lots of wicks, like it usually tends to reject quite a bit. So it's kind of like a support area, but we actually use like body structure for it. So like this would be an area of interest. Like you have one body touch, two body touch, three body touch. That's the area of interest that I'm looking at. But you can also use these wig zones, but we use the actual bodies. But this is just a point to note that whenever price usually like wicks into a zone, it'll continue to wick in and keep rejecting those zones like that. So I was thinking that we need to like make sure that we get out, or if we're at a 2R or 2.5 hour in these zones, we need to exit because it's probably not gonna rip up, right? But that wasn't really the case in this term. So to start off with this, like I said before, we're trading in direction with the previous weekly candle. So the previous weekly candle closes as a bullish candle, right? So we're okay, we're bullish. The trend is bullish, so we're going to be looking to take it up to the next weekly structure point because it's a weekly wick pullback, right? We want the next week to start off, have a wick pullback, and then pop up to the next structure point, which is right here, which is exactly what it did. So how that worked out was here, you can see that the week started off on Monday right here. It didn't hit that point on there, so we're good because we're using the weekly structure point, right? So we have to wait for a daily pullback. So basically what happened was it started off Monday was here, or well, Monday was here, and then we're like, okay, we need at least a 1 to 2 daily candle pullback. So the daily candle, we waited, the daily candle pullback. So we have at least a one candle pullback now. Okay, so we're ready to go down to the 4 hour now. On the 4 hour, we wanted to pull back to a 4 hour area of interest and also with our fib levels. So you can see our fib levels are right here right here. So within this zone on here, we want price to pull into here. So we're not worried about any other area of interest until we get into this zone. So basically, you just set an alarm here. I don't really set alarms because I just like check every 4 hours to see where it's at. So 4 hour came. This was on Monday. So I'll go down to show you. So basically what happens is when it taps into that zone, you want to then look for let me do this because it's cleaner. So it taps into that zone, right? Right there, tapped into the zone, and then we need a bullish candle to close in our direction. So we had that bullish candle close. I hate how TradingView updated this, and now I have to go through. TradingView is always making changes when shit works properly all the time. Like, stop fixing it. So yeah, we have the bullish candle close. So we know for the next 4 hour period between 3 to 11, or 3 to 7, do we have that's our area that we're going to be looking for an entry, right? So I just mark out here to let me know that's the start. And then this box here, if it goes outside of this box, I'm not interested. And I'm not looking to take a trade before it gets into this box here. So when it got into that area, we then looked and we saw that the 30 minute is bullish because we need the 30 minute to be in trend, right? So the 30 minutes in trend this whole entire time. None of this is a break of structure or anything like that. Like this, not a structure point, not a structure point, not a structure point, because you need to be able to draw. For it to be a structure point, you need to have these bends. Whenever it has that bend, that is a structure point, right? So until it has that, I'm not interested in it. So we're just looking for higher lows and lower highs. All this is just internal structure because it's all within this lower high here, right? So, okay. So, okay, anyways. All right, so we're in here. The 30 minutes obviously bullish, so right, so within this time here. So now we need to make sure that the 15 minutes bullish because I'm not looking to take an entry off a 30-minute engulfing signal just because when you do that, it has a higher fail rate from my stats that I found that I've logged. So I'm going on to the 15 because then I can have a tighter entry, right? So here we get into the 15. This would have been an entry right here because you have this neckline. So this is an accumulation level, basically like a support level. So you're buying and selling off of support. Oh, I also forgot to mention that I also like to combine 4 hour area of interest. So how we do that is we go to the 4 hour and then you just look for points where the 4 hour is hit multiple times. So right here you have one touch, two touch, one touch, two touch, three touch. Here you have one touch, two touch, three touch. So these are valid 4 hour areas of interest, right? So as you can see, it lines up exactly with our fib levels. So you can see we have area of interest, which is a nice solid support on the 4 hour, and we have solid support, or we have within this area of interest here on our fib levels. And I've tested hundreds of trades, and they tend to either come back to this fib level here or this fib level on here. So I'm waiting for it to tap into here or then tap into here before I'm interested. Here are the fib levels. 25.38 and 75. This is just how I trade. You guys can figure out your own fib level. Some people like to use 618 and things like that. I don't find that works very well, or at least you're not going to get a risk to reward that is worth it. You know, some people can do that if they like having, 1.5 R or 2 Rs and things like that, but I'd rather just wait for a nice solid 3 R or higher. So yeah, we get into that zone, the 15 to 30 minutes in trend. Now, one of the things we need to make sure is that when prices pulling back, like when it's, so it broke here, right? We have this accumulation level here. We have this support level here, this accumulation level. We have one, two, three, 4 wicks. As long as you have 4 wicks, that's a good accumulation level. And then I want to put my support there on top of a candle. Like it can't be floating. Like it's not like one of this. That's not a good level or anything like that. It has to be on top of the base, right? So I'm touching a candle on there and I have at least 4 wicks. And it's 4 wicks because the lower in the structure you go, this will actually be structures instead of wicks. It's just on a 15 minute because you're on a larger time frame. It looks different because it looks like wicks, right? But on a 5 minute, this will actually be structure. On a 1 minute, this will actually be structure, right? So we get in here. When this is pulling back, you can tell it's I didn't like this pullback because I don't want this pullback to violate this neckline by more than 1.9 plus pips. So if I go, basically, if I just use this, go from here to here, you can see that that's broken past it by 6 pips. That is too much for me. That's not how you make it bigger. Yeah. See, it's gone past it by 6 pips. For this to work for me, I want it to be less than 1.9 pips. So if I go to my proper pullback rules on here, we want a high quality retest, right? So for a high quality retest, basically you can see that price does not accumulate or pull back choppy. So when it's pulling back, I don't want it to be like pulling back like this and having contrary bullish candles going in the bullish direction before it gets to my zone. And then also I don't want it to break the neckline by more than 1.9 pips. So this had broken it by like 6 points, right? So I'm not interested in that. And also when it's pulling back, one thing that I've noticed that's really like, it took me a long time to notice it, but I'm very glad that I noticed it now. This is what happens when you journal everything is when you're pulling back, you don't want it to have rejected a zone before it pulled back. And what I mean by that is, say you have like an accumulation zone, like you have like 1, 2, 3, 4 wicks for an accumulation, right? But then it pulls back. And when it pulls back, it creates an engulfing pattern like this bearish even star engulfing pattern that rejects this neckline on here. That's a very bad pullback. You don't want that. That's what causes a lot of things to fail. So that's why we now have for rule 4, price can do anything once it's past the neckline on that part. So, okay. No engulfing candle. No engulfing candle rejects a four-wick accumulation neckline on the way back. If you see an engulfing rejecting the four-wick neckline, this is an invalid setup. Don't trade it. It's an improper pullback and it increases the risk of a reversal. So this is just like this is a very key point because a lot of my losses have come from that because I'm like I have the accumulation perfect, the daily's perfect, the weekly's perfect. I don't understand why this is happening. And I understand now because when I'm pulling back, like when it's pulling back, let's say for example, this like let me draw it out here. Like there was an accumulation level somewhere here, right? Maybe like at this part right here. There was like this accumulation level right here. Right there. And then this candle rejected that level and then pulled back. So then when you try to enter on that, you get smashed. So that's why we have to avoid that. So that and that, those are the rules for that. So I wasn't interested in this zone because of that, right? So then we go back to the 4 hour. The daily is already fine, so we don't have to worry about anything. Then here, daily at 11 p.m. to, or sorry, at 11 a.m. to 3 p.m., we had another 4 hour candle. So 11 a.m. sorry to 3 p.m. right here. So right here we have another one. So then we're gonna again mark out our kill zone. So we're like, okay, so from this next 4 hour candle, which starts at 3 to 7, we are looking for an entry, right? So same thing, we go back in there. We know the 30 minutes still in trend. We're not interested in anything. We know the 30 minutes good. So then we go to the 15 minute. What's the 15 minute doing? The 15 minute is currently within this time. It is bullish. We broke that level, so now we're bearish. We broke this level, so now we're bullish. So this here is the higher low, and this is the higher high. We pulled back, we make a new higher high. So then this is the higher low, this is the higher high. So then we keep looking, we go forward, and there is no accumulation level here or anything, so we weren't interested in that or anything, right? So then we go forward, not interested. Not interested until we see like this would be like a neckline right here, right? So if price within this time comes here, oh, actually, so, oops. Oh, that is so annoying now. Oh my God. This is, how am I supposed to get rid of this? Okay, so you can see it had broken this higher low right here. So now we're bearish technically, so I'm not interested. This is the lower high, this is the lower low. So not interested until we break either below here and then break above or break above and then pull back, right? So not interested, not interested in this. Now we've broken above, so now it's good. So now it's pulled back. So if we get an engulfing right here that engulfs this, this would be, let me see, make sure. One, two, three, four. See, the thing is with this one right here, have you have an accumulation level here. So one, two, three, 4 wicks, but you also have this engulfing that rejected this neckline and then pulled back. So that's what makes this invalid. This makes it super invalid. You don't want to enter on that because then your higher low would be right here and then price will pretty much go through that. So let me just take a screenshot of this. Let me change this to improper, where is it? Improper low quality retest. So the same rules apply right here, as you see. Let's confirm that there's no engulfing candle rejecting the 4 wick accumulation neckline on the way back to the zone. If you see this 4 wick, if you see an engulfing rejecting that accumulation level, it's an invalid setup. Do not trade it. The signal is improper. And it increases the risk. Like you just need to wait for a cleaner and only wait for a cleaner setup and only re-engage when a new valid structure is formed, right? So I'm not interested even if we get an engulf in there. However, during that time, there is this 4 hour that formed. I don't think this is closed yet. Yeah, okay. So not interested in that. Now we have this bullish candle that formed. Yeah, okay. So this would have been a valid zone. This would not because that bearish candle closed that way, and then this would be. So bearish, we're still within structure. Oh, this setup actually, this is interesting. I took it when it didn't even. Okay. Yeah, that wasn't. This is 11 p.m. Oh, no, this is proper. Yeah, because this would have been at 11 p.m. So as you can see, like the candle closed. This candle closed right here. So then we get in on the next candle, right? Which starts exactly at 11 p.m., which is in our kill zone. So it just looks weird in replay mode because I don't usually look at it in replay mode like this. Like it's always live, right? But I know that 11, I'm checking, right? So if the previous 4 hour candle closes a bullish candle, then I know the next period from 11 to 3 a.m., we're ready to go, right? So that's exactly what happened right here. So that, jeez. That candle close, we have this accumulation neckline here, 1 wick, 2 wick, 3 wick. Nah, this is no replay mode is definitely messed up because I remember looking at this and I'm like, this matches our rules. This looks exactly right. And also, this is a 3 wick neckline. So whenever you have three flat candles, that actually counts as a structure point. Because if you look at this, you would be like, okay, this is technically the lower high. This is the lower low, right? But whenever you have this three flat candle, that actually counts the same as one of these bends on here. So that's a structure point. So there, and that looks good. And replay mode is definitely 100. How do I don't know how to get rid of the brush now without, because I used to use just left click and it would get rid of that. So, bro, trading view. Why? Why did you change that? Anyway, so yeah, they definitely modified this candle because when I looked at it, it was definitely 4 wicks on there in a row. It looked good. So no rejection of an accumulation neckline or anything like that. Here you have, you can see it. Yeah, I didn't take it on the 5 minute because we have this bullish candle going there, which is contrary, right? So not interested in that. And there's no accumulation levels on here. So it was on the 15 minute and this wick definitely looked better because I wouldn't have taken it if it's just 3 wicks like that. So they definitely changed this on here. So, or maybe just the way I had it, like it was like this, and I was like, yeah, this looks good. So then pulls back, gets the engulf in at 10:45. So then we're looking to enter on the next 15-minute candle, which starts at 11 right here. So we jump in at 11. I don't even like, how do can I favorite this that way? I can always jump back to it now. Yeah, because this is going to be the only way I'm going to be able to do that without left clicking. Okay, so boom, get the engulfing right there. You put the stops before the last higher level four price shifted structure. So price is bearish, structure point right here, bearish, breaks this higher, breaks this lower high right here. So then this is the last higher low before price shifts back to bullish. Technically, this would be it right here, but this is the safest spot. So the last higher low before price shift the structure to bullish would be either here or you could put it here if you want to save for stop. Because we have such like a large take profit, I was like, okay, it's fine here, but you could have really just put it there. So you go here, just put it below the wicks, and then you do +5 pips. So we'll just do like 24 or tuck it below the um, area of interest right there. And then yeah, basically this is what happened. Prices popped up. There is another. So within this structure, right, the previous candle had closed bullish there as well too. So we can go back to the replay. Previous candle closed bullish on the 4 hour. So you know within this period here, this 4 hour period from 11 to 3 a.m., if you're going to be up, then as long as the 30 minutes in trend, which it is, as long as the 15 minutes in trend, then you can look for another entry point. So this is another accumulation level right here. Surprise shift the structure. This would have been the last point if you want to use that as well too. Right there. So then you're just looking for a retest of this neckline. It either happens on the 15 or the 5 minutes. So let me see when it pulls back, what happens. It didn't pull back. Yeah, that was the only level. So it didn't pull back there. There's another one right here. One, two, three, four. But then the last point before price shift would be right here, and you wouldn't have at least a 2R before you can get to this weekly structure point. So wouldn't be interested in that. But basically, yeah, basically 5R. Yeah, this is bugging me. This is why I don't like doing replay mode because now, like, it kind of throws everything off because you're like, I know for fact that touched because there wouldn't have been a way. Like, I would not have been interested in if that didn't happen, right? Um, yes, okay. So yeah, that played out. The other one was silver. So basically the exact same thing. Ah, so we it's on the weekly because I was like, yeah, okay. I'm so confused. Why doesn't any of this match up? Because I would not have been looking at this if the previous candle closed as a bearish candle, unless it was at a weekly area of interest, which all the way back in 2012 wouldn't have count. This is trippy. They definitely updated some things because like I couldn't even go back on the 5 minute far enough to see my previous like when I was analyzing my journal, going back on the 5 minute, I was like, why can't I go back? It's like I need to upgrade my plan in order to go back further now. And like that was never the case before. And then yeah, now definitely if you right click, it doesn't switch the tool back to the default one. You have to manually go back and click here in order to do that. So yeah, and that that doesn't make this doesn't make any sense either because why would I be targeting here if the next weekly structure point would have been here and this is bearish? What is going on here? So I think yeah, okay, if this is the weekly, it would have. Yeah, okay, this was a counter trend. So, okay, so what happened is previous candle closed as a bearish candle, right? And we're taking a trade in the direction with the previous candle. So since we're at a higher high, we have to look for a counter trend. Yeah, counter trend needed daily pullback. Okay, so then the next weekly structure point would be this next structure point here. This is the first point that when we pull back, we would have to come in contact with. So we want to make sure that we get out there. So basically this candle, this is going to take use some time to get used to because I can't right click or do anything because it is tries. Okay, so yeah. So then we're like, okay, we're looking to get out of here. Previous weekly candle closed bearish. Next weekly target's right here. Go to the daily. The daily is bearish, right? So then if the daily is bearish, we need at least, again, a daily candle pullback. And then once that candle pulls back, we go to the 4 hour. So we wait. Daily candle pulls back right there. Now we go to the 4 hour. The 4 hours pull back to our fib levels right here, 0.75. So then we know to now engage it. And let me see, like you can see there is the area of interest that lines up with this. Can I right click and, oh, you can't right click and change that anymore. You have to go all the way down to here, go to and switch it over. So as you can see, one touch, two touch, three touch, four touch. This is a valid 4 hour area of interest. We need a candle to close in our direction. So right here, this 4 hour bearish candle close in our direction. So we know from the next period from 3 p.m. to 7 p.m. that it is ready. So we have the line marked out there and box marked out there. What's the 30-minute saying? The 30-minute is bearish. Uh, the 30-minute is bullish. Okay. And then the 30-minute goes bearish right here. So from this is the lower high, this is the lower low. So then we have to go to the 15-minute. Let's see what the 50-minute is saying. The 50-minute is also bearish, so we're good. So then we're just waiting for it to come back and retest either this neckline. Let's see, one, two, three, four. This is a neckline here. So we have one touch, but all of this is within, yeah, okay, so this is good. Wow, they changed a lot of things up on here. Okay, so this is one neckline. This is another one basically right here. So when price is pulling back again, you don't want an engulfing that breaks through these necklines on here on the pullback. So it drops and then it starts to pull back. This is all valid because there's no neckline here, but as you can see, this is now a Morningstar engulfing pattern. And this is an accumulation neckline right here. So we actually violated that. So if you look on the pull, wait, can I shift and then pull? Okay, perfect. As you can see, we broke that, violated pretty bigly by 305. So that's invalid. We wouldn't be entering an engulfing after that if it came. And then also the way now, okay, yeah, now you have it's invalid because you have this rejection candle rejecting the neckline going bullish. So I'm not interested in any of this. And if I did put it here, my stops would have to be here because this would be the last lower high before price shift structure to bearish. So when bearish here, this is the shift of structure right here. So yeah, you if you enter it here, you'd have to put your like you'd have to do this. And you'd have to put your stops here. This is where it shifted, and then add another like 50 because it's an exotic pair. So we'll just do like that. And then your take profit would be here. So only a 1.9 R, not worth it. So then it starts doing all this. We're not interested in any of that. It pulls back. We already know the 15-minute is bearish, so we're just going to wait for some sort of internal structure shift. And all of this is invalid, so I'm not interested in any of this. So then it kind of like goes, this 4 hour candle also closed bearish. As you can see, this whole entire structure here, this is a 4 hour period. This was the lower high, this is the lower low, and this would be the where the candle closed. So this would be the basically price opened here, made a bottom wick, and then now it's pulling back and it closed here. So it's pretty bearish. So then with the next 4 hour period, we know we're ready. So 7 to 11. Why is this box different? Why is this at 245? This should be at 2B. Uh, is this? Why is it so off? Okay, let me just adjust it on the 4 hour. Okay, so we already know the 30 minutes bearish the whole entire time. 15-minute. Basically, there was nothing here, and I was like, okay, we need some sort of like internal shift. So if you watched the previous video that I uploaded, the daily breakdown for whatever day this was on the 23rd. So if you watch the daily breakdown, I was saying, okay, we need the 4 hour candle to close bearish. If it does, we're looking for some sort of internal shift on the lower time frame on like the 5 minute or something before entering. This is only a 3 week, so not interested in any engulfing that happens here or anything like that. So basically, yeah, all that happened. Fast forward, let me just skip through everything and get to where we need to be, which is in this area here. So, whoops, too far. Okay, previous candle had closed bearish, as you can see, previous 4 hour candle. So that means this period here is opened up. So then 30 minutes still bearish. We go to the 15-minute. The 15 minutes having all of this messiness here. So we need some sort of internal break retest and then drop once we get into this period on here. So this is an invalid pullback, so I wouldn't be interested in this only because like there is a neckline right here and it violated it pretty bigly by like I was saying, we don't want it to be that invalid, 220 something pips. So Not interested in that. And let me go. You can see better on the 5 minute. So the 5 minute, as you can see, because this is an exotic pair, everything is a little weird. So we had a pullback, and this pullback here, this was not an engulfing candle or anything like that. So it's okay if it breaks this neckline here, right? So it's only invalid because like this is an actual morning star engulfing pattern, right? So if you measure it, you can see that the this is the first candle, the second candle, the third candle. So if this third candle is bigger than this middle candle on here, that's the engulfing pattern, right? So if you measure it, you go, hold on, shift, measure to here, 256.9 pips, right? So then you measure this candle, and this is 396 candles. So this is obviously an engulfing pattern, right? So not interested in that. Um, and you look, remember that the 5 minute, the whole entire time, the 5 minute has been bearish. This is the lower high, this is the lower low. So all of this is just internal structure. So just once you get another internal structure shift and a retest, then it's good, right? So basically, right here, you look, we've pulled back. This is an engulfing, not interested because we violated the neckline. We've pulled back to another neckline on here with another 4 wick accumulation level, but this is not an engulfing level, so this is fine. But then we get an engulfing candle right here, right? And this engulfing candle broke this neckline. So that's our entry. We have to remember that price on um the you could do it right here if you want, but yeah, so this is the no, it has to be right here because price was bullish, right? Price is bullish, 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 and then price shifted. So the first time the price shifted structure, that's where you have to put. That's the last lower high before price shifted structure to bearish, right? So right here. And then you add plus 50 pips because again, it's an exotic pair. So you go add the wick, add, geez, this is basically right there. So you can actually tighten this up a little bit and put this like right here. Now you target the weekly structure point, which would be right here, 3R. So then you play it out, and basically this kind of like does that. You don't watch it, you just set an alarm because if you're watching it, it's just going to really mess with your head. So ignore all of that. Basically this would have been another entry right here as well too, because here you can see you have, this is a pullback. This is an engulfing, but notice it didn't reject any 4 wick accumulation levels. So it's still valid, right? But then when you get here, you have an engulfing that rejects this 1 wick, 2 wick, 3 wick, 4 wick level, and you get engulfing right here. But you'd have to put your stops right here, and then you'd have to put your stops again right here because this is the last point before price shifted to bearish, right? So it wouldn't be a nice it'd only be like a 1R before you have to get out. So like I said, people like to trade those. I don't. I like to get these nice clean 3Rs plus. So as you can see, played out nicely right there. Um, and the other one was Euro JPY. So exact same thing. I'm not gonna go through all this, but I'm just gonna fast forward until we get to the point because you guys kind of you get why. It's gonna take some time to get used to. You get how I look at structure and what I'm looking for. So, but, but. Okay, so previous candle closed bullish. So we know from the period of 3 to 7 a.m. then we're looking for an entry, right? So I would basically just like wake up at 7 a.m. because I'm not gonna stay up all night for that. So yeah, you already know 4 hours bullish. 30 minute is also bullish. This is the 4 hour higher high, 4 hour higher high, 4 hour higher low. You cannot take a trade when you're above the higher high, and you can't take it obviously when it's below the higher low because then you shift the structure, right? So we know everything's in trend. We get here, you can see that the 15 minute is bullish. And you can see that there is accumulation levels forming here, accumulation levels forming here and here. So then you just wait for a retest. This one was on the 5 minute. So we get into this zone. And then remember, like I said, you have to do it before the last time before price shifts structure to bullish, right? So the last higher low before price shifts, as you can see, price is boop, 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 bearish, and then it shifts to bullish. So this was the last time that it did that before it shifted. So you can also see right here that price went bullish, and then went bearish, and then went back bullish. So then this would be the last higher low before price shifted right here, right? Can't right click anymore. You have to go down here, and then you have to go, where did I put it? Yeah, last higher low before price shifted structure again on the entry time frame. So as you can see right there, that's the entry. So there is no bullish candles contrary to the trend, and also there is no four-wick accumulation levels that this engulfing candle here, this one engulfing candle, this is one engulfing candle right here. So as long as these wicks and these didn't reject any 4-hour accumulation levels, so, or sorry, not 4-hour accumulation, like 5-minute accumulation level, then it's valid, right? So as you can see, oh, this one actually did. So this is actually an invalid entry for taking this on the 5-minute. So right here, this is a level right here. Boop, boop, boop. You can see we rejected that, right? So because I was already in GJ, I'm not really too interested in this one because I'm not gonna like take two yen pair trades. If they both hit stop loss, then I'm like I've lost 2% for no reason. If they both hit, yeah, I'll make 6%. But usually like it kind of messes up the stats when you take two of the same pairs on there. So since GJ was already running, I wouldn't be interested in this. Well, I wasn't interested in this. But this is just kind of like show how it'll work out. And then this one, I'll show you why I move stops to break even on here because yeah, the week ended and also you can see that we've gotten into this zone on here where price has gotten into this like you can see this giant daily wick right here. So giant daily wick and like last time price got into here, it just rejected, right? So I'm expecting price to get into here and then reject again. So this is why stops were moved to break even on here. So we got in the entry and basically, let me just show like it got close to that level, got there, rejected, rejected, popped up a little, rejected, kept on rejecting, came back to break even at one point. Let me just go on to 30 minutes. It's faster. So as you can see, it came right back to entry, and I was like, okay, it keeps rejecting this zone and coming back to entry, keep rejecting this zone, come back to entry. But I really wanted this to work out, so I didn't like move my stops to break even there. But when the market's about to close on Friday, I was like, okay, yeah, it's most likely going to pop, reject here because like GJ already hit take profit. GJ and Euro JPY, they're both yen pairs, right? So this one already played out. Chances are this already played out as well too, which is why it gave us that improper entry there when it rejected that level, right? So yeah, it does that, and I was like, I'm not gonna move it, and then it popped up here again. I was like, okay, I'm gonna move. I'm gonna move the second time, or the next time it pops up and rejects here, I'm gonna move my stops to break even. So it pops up right there, and I was like, okay, like it's re came back to break even once, two, three times, four times. Like this thing does not want to go, right? So I'm like, okay, stops to break even, didn't tag me there, and then the market basically closed. Like, where did it close? Got there, popped up, and then it just closed right there. So max price got to was like a 1.8 R. I was like, okay, if it gets to 2 R, then yeah, but if we were taking, was this? So yeah, there was a better entry right here on a 15-minute and we engulf in. Yeah, so yeah, right here. So this was actually cleaner on the 15-minute. So as you can see, we have one, two, three, 4 wicks right here. But like I said, we have this engulfing that has rejected this level on here, so it's an invalid entry. So no matter what it does, even if it's doing all this, like uh this is not worth taking because this is a very high probability that it's going to reject. So yeah, invalid, improper entry on that. But these two played out pretty nice. Even though they did look a little weird because of the replay mode. I swear replay mode is definitely messing with everything. But those are the ones that played out. These are the ones that kind of just like hit take profit and yeah, got into that. As you see, it's in the daily where all these wicks are. Basically got here and couldn't break through and just rejected and just dropped through. So we weren't interested in that. EuroCAD, same thing. Wick zones on here with the daily. Very, very messy. Wick, 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 wick. Gets into the zone, rejects again before it can go to the weekly structure point. This, before the week started, it kind of, I think it already just went, yeah, this is, week started on Monday. It just went right in to take profit and didn't give us a chance to enter. Same with this one, I believe. And yeah, so that's how all that played out basically. That was a long video. That should not have been that long, but hopefully there's a lot of value in there. Oh, I guess one thing I'll show is this. So yeah, these are all the rules on here. I have to log the two other trades now, but the reason why I know that like these information is because I log all these things on here and then I can look back at them and see. And I've noticed through all my losses that the reason why they lose is because they have that rejection that happens um like that when you go on the can't right click, gotta go all is there a hot see the thing is I can't even hotkey this because like the hotkey is they're like if you press Alt R you can adjust the size of it, right? Wasn't it? It was at one point you could press Alt R and then rescale everything. Alt L now? Yeah, it used to be Alt R, but if I press Alt R, it brings up this NVIDIA thing, which shows me my stats for my computer, but this doesn't scale it properly. Stupid. I wonder if I can change that hotkey to something else. Um, but yeah, that's like I was saying, like the reason I know not to take that is because I've analyzed all of my losses, and that's basically exactly what happens. Like the 15, like we have on the pullback. Let me show you basically. I think I can go here. So like you can see on the pullback right here, this is an engulfing candle here rejecting this four-wick neckline. So then when you do get it on an engulfing candle here, you get blasted, right? So, and this has happened so much. I think this is like double logged something. Some of these are double logged. But I think probably if we go here as well too. Let's go to the entry. Oh no, this was like yeah, the 15-minute wasn't even in trend, so this was just a bad trade. Let me see. This doesn't look like any bad things on there. So then 15-minute, 5-minute trend. This is where we entered on. So as you can see, like I can't go on a replay back to see it, but here you can see there's a neckline and then we have this engulfing candle here. This even a star engulfing pattern that rejected the neckline. So then when it comes back and you get another accumulation level, you can't take it because then it'll just basically go right through to your stop loss. Um, ba, ba, ba. Yeah, we entered here. As you can see, there's a neckline right here, right? 1, 2, 3, 4 wicks. We get this engulfing candle that violates the neckline. So then when you do get another engulfing candle that rejects the neckline on here, even though everything looks all clean, it's improper from the start because the pullback was invalidated. So that's why it'll like blast through and then do all these things. So go there. I think I have more results. I think this was just, oh, is there something just bad on this? Let me see what I did on there. Oh yeah, the weekly already went in to take profit and I didn't even realize and I tried to force a trade. What about oil? Stop loss placement was improper, but we got another entry on this. So basically, this is what happens when you don't put your stop loss properly. So this was the like you see price was bearish, right? Price was bearish and then price shifted bullish. So this was the last higher low before price shifted. This is where I found out how to properly put my stop loss, right? So because before I used to be like, okay, we shift the structure, let's put it below the higher low now that we're bullish, right? But no, you have to put it before or after, sorry, the last higher low or lower high before price shifts structure to the trend. So price is bearish here, bearish, still bearish, bearish. Then we finally shift to bullish. So now that we finally shifted to bullish, we need to put our stops below the last point that we hit before price shifted, plus 5 pips. So then if we go to the results, and I go forward. Anyways, so here, price came, literally just tagged that out right there, and then went. And yeah, we put our stops properly. Second time here. And yeah, and this was good because this is not an improper pullback. As you can see, price went, price pulled back. There is not four wicks or anything. This is one, two. This is not a wick, and that's not a wick. So it didn't really reject that or anything with this engulfing, so that makes it clean, right? So then when you finally come back and retest this neckline here and you get the engulfing, or yeah, right here, then it's valid to enter. You just got to put your stops properly. And this absolutely ripped. Like this was, I don't even know how big that is, but like I said, I cap all my trades usually at 3R, or if I'm feeling it, can just leave a little bit of a runner. But for challenges, there's no point, you just cap your trades and then pass a challenge and you're good to go. So yeah, same thing, like weekly, we always trade in trend with the weekly trend. So the weekly trend was bullish here. The previous weekly candle also closes the bullish. So we're taking it up to the next weekly structure because it's the weekly wick pullback. So when the next week started, it pulled back on the wick and then popped up here. Like I said, you need that daily to have at least that one candle pullback. And there's no, as you see, like they're all these are wick zones, but we're in a clean area where there's no previous daily rejections like that. So it's nice and clean. If I hit exit, is it going to exit? Okay, perfect. We have the 4 hour candle pull back and pull back to the 0.75. And we have a bullish candle closing our direction. So we know from the next period to the next 4 hour period, within that 4 hour window, we can look for the 30 minute to be in trend, which is exactly what happened here. 30 minute was in trend. So as long as the 30 minutes in trend, you look for the 15 minute to be in trend. And then when the 15 minutes in trend, you look for an accumulation level, which is four wicks, either on the 15 or the 5 minute, and then stack your stops before the last higher low or lower high before price shift structure to bullish, which is exactly what we did here. And it's within the 4 hour range, within the 4 hour higher low and higher high. So then it's clean. Um, da, da, da. And if we go to wins, you can see the wins here. Okay, perfect. I did log GJ. Um, oh, it was actually improper. It was just the way I was looking at it. I was like, okay, it looks clean to me. That's crazy. Okay, so yeah, you can see. I need to do my breakdown for the coming week, so I need to take a break here. But basically, as you can see, we pulled back, but this is not, even though we went past this neckline on here on the 15 minute, you just put it right against the candle bodies in there. I guess sometimes I'm kind of sloppy with it, or depending on the time frame that I'm looking at, but this is not an engulfing candle here, so it doesn't matter if it breaks through this, but we do have an engulfing candle here rejecting this neckline on here. So then you enter that, price was bullish, and then price went bearish. So this is the last lower high before price shift the structure, so you put your stops there. Exotic period at plus 50 pips. This was the result. It's just the same thing over and over. And this went to 3R and I just capped it out there. Pretty sure it reversed after 3R as well. Yeah. Was asleep in London, so I didn't take that part. But there was another entry that came and I did take it. So, and yeah, here we can see this is rules for me to remember because sometimes I try to cheat and put my stop loss improper. So I gotta remember that price was bullish here and you put it there. Price was bullish, then price shifted bearish to there. If you do internal structure, so all of this was price here, bullish, price then shifted structure, right? So all of this, it doesn't matter what goes in here, you cannot put your stop loss in this internal structure here. You have to use the actual structure point because then price can do anything in between this, but if it's respecting structure, it will respect the last lower high before price shifts. So yeah, nice gains on there and yeah. So as long as you like also here, like I'll know that, if I can keep my win rate within this like 80 to 85% win rate, I can target like, 3R risk and it's pretty solid. So it's actually a very high win rate. Sometimes it could drop to 75 if I'm just really sloppy with it, but most of the times I can keep it within this 80% range with a 3R. And I know that sometimes I could see like probably like a two consecutive losses in a row. It really pisses me off. But then as long as I come back here and look here, then I know that like, hey, like this is what happens when you have this high of a win rate. Like no one has 100% win rate, right? So if you do expect it, like you can hit two losses in a row. And if my win rate drops because I'm really sloppy, just know that you can hit, there's a 50% chance of you hitting three losses in a row, which is rare, but it could happen. But there's definitely a 60, 80% chance of me hitting 2%, two losses in a row. So yeah, just rules for me to keep up. Anyways, that's the breakdown for this week. I got away with a lot of sloppy trading with these, well, basically this but yeah, this one is interesting though, because I could swear when I looked at it, I was like, because I looked at it on here and I was like, hey, there's a bullish contrary candle. Not interested at all because we didn't retest the neckline or anything like that. We have this engulfing right here. Yeah, I didn't retest anything that I liked. But then on the 15, it came back and I was like, yep, 4 wicks. Even though it was only three, get an engulfing on there, set your stop. So price went bearish. My stops have to be here because this is the last point, 35. The last point before price had shifted. Price went bearish. Last point before price shifted. So not this one here. This is the actual higher low before price shifted. So, and I just remember that because I looked here and then I was like, okay, this is what you got to do. Price shifted. So put it like there's a better example. Why is this one so, can I, yeah. So right here I looked and I'm like, okay, price had shifted right here. So I have to use all of this, not the internal structure or anything like that. But yeah, this is gonna bug me because it's like you didn't follow your rules and you took a trade on that. So I think what I'm gonna do is whenever I take an improper trade that doesn't really match the rules and it wins, what I'm gonna do is I'm just gonna risk all of the gains on the next trade. Because technically I shouldn't have taken that trade. So if it works out, then cool, but it's still a wrong trade. So I need a punishment of some sort. I still have to cold shower. And I still have to risk all the gains on the next trade. So that means that the next trade I have to make, if I'm going to risk like a good 3% gain, it has to be an absolutely perfect trade because I don't want to risk 3% for no reason. But anyways, that is a breakdown for the previous week of 23rd to 27. I'm about to take a break and then I'm going to do the next breakdown for the upcoming week of the 30th to the 4th. So yeah, hopefully that teaches you guys some stuff and solid reminder for me. Peace.